Really interesting piece in the AFR today. It talks about how bank data, well, it refers to bank data, business trading profitability, forward orders had surged back in June, which kind of pointed to a quick, V-shaped recovery right until Victoria put the brakes on again.
Yeah, and that's a big problem for the economy. Look, and there are economists like Josh Williamson from Citi who thinks that, the recovery is not going to be derailed by Victoria. But you can't ignore the fact that Victoria is a quarter of the Aussie economy. The kind of very good recovery is certainly going to be affected by it. I do make the point, and I've made this a couple of times with you, is that CBD economies have been really badly affected, but suburban economies are doing really well. So even though some parts of the economy aren't going to do well, like, for example, let's take the local cafe that's now getting basically Saturday and Sunday trading 7 days a week because people are working from home. That's going to be a little bit of a surprise when we actually get the economic growth numbers. But I cannot believe that the Victorian lockdown is not going to reduce the greatness of our economic recovery.
All right. Tax cuts, Pete, a business study has recommended today.
Yeah, Menzies' research paper, and Henry Ergus, who often is seen in the Australian, is one of the architects of this. He says that we just cannot kid ourselves that tax cuts aren't needed right now. I think the pressure is being put on Josh Frydenberg with his mini budget on July 23 to bring them forward. They're scheduled to be in the pipeline anyway. So given what we're seeing, and the Victorian instance, the problem that you brought up earlier, is another good reason why those tax cuts should come forward, and that will encourage spending.
But does he also argue that that the New Start allowance should return to pre-COVID levels within about 6 months?
That is an argument you'd run with if the economic recovery is as strong as was kind of predicted when you looked at. Like, there's a fantastic rebound in business confidence this week. The NAB survey, went from, I think, -20 to +1, but it was down at -65 in March. So look, there's some great stuff going on, Pete. But I just think at the moment that the Treasury is being put under a lot of pressure from lots of people saying, you got to do this, you got to do that.
Sure.
I think tax cuts are probably the smartest things he can bring forward on July 23.
Okay, we've just heard news out of the UK too that they're making masks mandatory in shopping centres. So whenever people go to the shops, they've got to wear a mask. It's more mandatory in the UK, in more places, I should say, rather than it is here in Australia. But France as well is moving to make them mandatory. I mean, what sort of an impact will this have?
Yeah, I really think it's something we should be thinking about, particularly since the Victorian thing has now resulted in infections in New South Wales. Queensland has just barred something like 70 suburbs in New South Wales from going to Queensland. And I just look at the success of masks in places like Hong Kong, where they mask up really, really quickly. And there the deaths were half a person in a million. And this is a country where everyone's living really close together and they travel on public transport. I just think even if only for 3 months we did mask up, it'd be a really good thing. And by the way, New York's doing it, Florida's not. Look at the improvement in New York's dealing with the coronavirus compared to Florida, and they're really in trouble down there.
Just finally, Pete, some interesting information relating to the oil sector. I want to get your thoughts on it. So Woodside's had to do a $6 billion write-down relating to its oil and gas. This is following other major oil companies around the world who are doing the same now. What does this mean for the picture when it comes to oil stocks?
Well, Pete, these kind of write-downs at this period of time is quite typical. Now, if the whole world economy was looking fantastic, you wouldn't have write-downs of this magnitude. But CEOs look into their crystal ball and they work in the worst-case scenario. And there have been a number of losses for Woodside in terms of deals that they put together based on the fact they didn't expect the coronavirus to come along. But I do think this is what I call butt covering, and it sets the scene for Woodside to report brilliantly maybe in 6 months or 12 months' time. Now, you might have noticed that the share price dropped about $15 during the coronavirus bottom point. It's now rebounded to $25. So anyone who bought in early will be feeling really good. It's dropped to $21 now, but still much better than it was at the low point. I just think this is the typical thing you see with LNG. And I will throw this one in quickly. Warren Buffett made a very big LNG play last week, when now his company, Berkshire Hathaway, is supplying like 19% of LNG in the US. So I think Woodside is well positioned for the future, but there's a bit of butt covering at this point in time.
Yeah, and that's a common thing, isn't it? You know, all these companies around the world are write-downs. It does sound dramatic, but it's not just the oil sector. It's companies right across the board that are doing that, kind of cleaning up their books. All right.
Yeah, and the banks did it also with the dividends. So they all do it at this point in time. It doesn't mean it's going to be reality going forward.